Good morning, guys. It's Chris from daxtrader.co.uk. It's Monday, the 29th of January 2018, and we're going to do a quick summary for the weekly outlook for the markets that we've done in the webinar this morning. So starting off with the DAX, before I get started, actually, just to let you know, trading financial markets is risky. It involves the risk of losing our invested money. And we're not providing any financial advice here. It's purely for educational purposes only. So if you decide to enter a trade off the back of this video, then do so, please, entirely at your own risk. Okay, so we have got a 10-minute chart here on the DAX. And if we zoomed out a little bit further, you'd see that we've got a pretty clear technical bullish trend. And at the moment, the trend defining level seems to be 13,220. Just simply because it looks like we broke to a new high. We've had this corrective pullback and we've found some support here at the bottom of the balance point extension. So if we keep above the 13,220, the chances are high that it will look to perhaps test this all-time high once more. So we have got a couple of zones marked out for a potential interest in buy spots. This is where buyers stepped in most recently with this particular ignition point here. And of course, that was where we got a reaction from the sell-off of late for the low of last week. So if we do get a test of those zones, we'll be looking to see if we could post in a buy. But on the wider view, this particular zone is still the key overall major trend-defining level. Now, there is a bearish idea as well, which was posted in one of my colleagues' groups, and it was this. It was based on ideas which we've discussed quite often in the past, based on an expanding pivot that we had recently. Normally with these setups, you find that price pulls back to balance, which is the horizontal line here at 1316. But it didn't do that, and instead it continued to break higher and actually gapped above this extended upper resistance line and then reversed, or looked to reverse. So it's a play that's still going. We bounced off this warning line here, which is a sliding parallel of the median line of this fork taken from these three major pivots, 3, 4, and 5. And it's just a parallel of that line. Got a reaction up there, and it's still valid to have called the top on this particular move. So it's an interesting setup at the moment, but for me personally, I'm looking to be a buyer. Okay, we looked at a number of different markets, and so we'll just go and take a look through these one by one, starting with, let's go with the S&P 500. Now, this particular market, there is only really one direction that it's going, although it seems to be getting towards the top. I'm only really interested in buying on dips. I don't want to be buying at current levels here. These zones marked out are potential areas for dips. Nothing clear on S&P 500. As far as the FTSE is concerned, it looks to be bullish again, but it's going to run straight into this 77.25 zone, which could present a wall of sellers as it did before. I was looking for a slightly deeper pullback towards the 75.90 zone. Didn't quite get that, but had a strong reaction on Friday. So looks like we might be getting a bit of a recovery on the FTSE. But again, I'd like to be a buyer on that market from low levels. The Dow, there's just, there's no point in buying up there. But those zones of potential corrective pullbacks, maybe look at the daily price movement range to find an intraday pullback target to look to buy from. But for this one at the moment, it's just pure mania. The Nikkei reached the target, which we've been talking about. I think I started talking about that in October, November time, and it was a 24,000 target based on a double up from the C point down here to this gap. We had a balance point pulled in here, this little zone. It gapped above the extension, so I thought it was primed for a double up, and it's managed to get there. Stayed within the fork lines as well, so pretty clean with that. But for now, a pullback into this zone would be interesting, somewhere around the 22.8 mark. NASDAQ on the hourly chart is posted an interesting pattern, and there was an opportunity for this one to be short. If you believe in things like butterflies and the like. So there was an hourly butterfly that has been posted on the NASDAQ. So keep an eye out on that one. Okay. oil is technically bullish, and there's no really denying that, but we're looking like we're putting in a potential pivot component here for a retracement. So if we stay below 66.65, it's bearish to either 64.60, somewhere around that line would be an interesting spot. That was the previous swing high. If we break above 66.65, then there's an opportunity to maybe buy on a pullback to test that zone. But yeah, I want to be only really a buyer at the moment on oil. Gold is an odd one because as far as resources go, I've not been buying gold. I've been looking at other markets instead, but it has been on an incredible rally for the last month or so, and wondering whether or not we're topping out here. We had quite a sharp ignition through this previous high, and we've kind of retraced back to test it. We haven't really made much progress to bounce from here, and we're failing to continue to move. So if this breaks below 1342, then there's an opportunity to buy in from lower levels. And 1308 to 1315 is a zone that I would like to buy from, but might be quite hopeful. All right, the euro dollar, we're looking like we're forming a pivot component here. What I mean by that is we're getting towards the top of a major impulse leg, and there's potential reaction that's needed, and a pullback towards 120.27 would be very, very interesting for a buy for me. The dollar yen is still clearly bearish, but the one thing that stood out to me is that we've got two minor impulse legs, bearish impulse legs here that are very, very similar in length, and two minors often make a major, and that might well be this kind of major bearish reaction leg finished. And if that was the case, then a turnaround at this point, if we get some clue as to a pivot component to get a bounce up to 111, that could be interesting. Now, this isn't just an odd setup. If that was an inverse shape, as in turned around the other side, flip it around that 108 point. So you'd instead of that being a spike higher and this being a spike lower, it would have been the other way around, lower and then higher. That would look more like a pivot component. But that looks like something that you'd see at the top of a trend, not the bottom. So I'm a bit confused about that shape. But if it is the turning point, then there's an opportunity to get about 5.5 to 1 on your money. Cable, this is the daily chart, so it's an incredibly long-term view, but we have pulled into this particular area, which is incredibly significant, and we're looking like we're starting to get some signs of potential turning point here. Too early to say for sure, but if it is going to be the case, then I'd imagine that if you want to buy this market from a longer-term view, it's better to get in from around about 137.5. And I think this was pretty much the last one we managed to get the time to look through, which is the dollar CAD. No significant opinion that I've got on here. We have busted below the lower median line parallel on this fork from these major pivots. And we're looking like we're maybe even testing goodbye on that one. But as far as we continue to have dollar strength and oil prices continue to head up, then I remain short on this market. And that's it. We didn't actually get any further than that. There's another 15 markets or so which we'll continue to send out. We'll look at those in the premium channels. However, that's a quick summary of what we looked through so far today. Come back on Wednesday for another one, and Friday for another video. But until then, have a great trading week, and we'll catch up with you later. Thank you.